We'll start today's proceeding. We have been discussing with you. Remember, the last 2 weeks we have been discussing on foreign currency, and I just want to show you one now. Now there is a news item I will upload onto your classroom, and it says second in power board listing. I will upload this paper article to you, small note of your. Remember, we have been discussing with regard to boards on the CSC. So we have discussed main board, sorry, then the D07 board, then the Empower board, and multi-currency board. Remember that we have discussed this, and in this uh, Empower board, Columbus Stock Exchange has approved the second SME centric Empower board listing by EML Consultant. Right now, Empower board, I have given you the requirements. What are the Empower board's requirements? You know, there was a question on you exam, and the sponsor has to be there. So basically, now this Empower board is there to come up to find the capital for the SME companies, small and medium scale companies. So what is the meaning of sponsor? Is that the SMEs don't have expertise, they don't have financial intelligence, they don't have how to list on the CSC. So all the background work should be done or the undertake by this sponsor. Sponsor is the person who takes every responsibility on the listing of this SME on this Empower board. So once the company is being listed, then the company will come to a particular level, then they will quit. So they will exit. So that's the mechanism on Empower board, and there was previously one. There was another company previous as well. This is the second one, Criswell Limited was the first Empower board listed company, and that was happened this year. Now this is the second one. EML Consulting was the incorporated 1993 to provide technical and management consultant service to the private and public sector in Sri Lanka across the globe. Right. So basically, this is the second one, EML Consultant, and now we have two companies. And also now look at now listen to this. EML is a new company to be listed on the Empower board. It says EML will list 90.9 million shares at 2 rupees by way of an introduction. By way of an introduction. So I will upload this particular article. I have sent email, but it has not reached to them. Uh, by way of introduction, remember the methods we have learned with you all, how the companies to be listed. Now, see all these words, all these contents we have learned under this investment banking subject are very much real. Now, the companies are doing this, right? So everything you have to learn it. So that's why I told you everything available on your notes. The PowerPoint presentations are concise form or the summarized form, which are more important for you, right? Anything we say, discuss, addition to that, Then write it down. But otherwise, you can't skip anything available on your on your notes, right? So by way of introduction, now see they don't want money, especially is that. So basically, why you want to be listed? Generally, you need to find money, right? So by listing, you are expecting that only. Now we learn by introduction. If you are doing an introduction, so the listed by introduction, basically you want to tell the people, the business world, no, no, we don't need money, but we need to comply. We like to comply whatever the compliance guidance given by the CSC. If you want to raise money, then you will go for IPO. If you want to raise money, you will go for private placement, cash issue. But here, of course, by introduction means what? Basically, once you so basically, so people will say, okay, now the company also can say we are listed. So when a company is being listed, now for example, if we say John Kills and the Siddha Leather, which one you know more? On which company you know more? John Kills. So why? It is a listed company. So if you have been listed, you have to publish all this information which is you think which is relevant to the investors or the public. So that is important. Right? But if it is not a unlisted, if it is an unlisted company, basically you should not divulge or disclose all matters relating to your company. So you can hide it. Only thing you have to make it, you have to publish the annual report and the AG. That's all. There are several requirements which are not going to discuss with you, but for listed companies, there are few. Now, before you being listed, you have to apply, you have to comply with some set of regulations. I told you, for you to be in the main board, you for you to be in the D07 board, there is a prerequisite, there is a pre-requirement for you to be listed. Once you've been listed, again you'll have to comply another set of requirements. So when you're taking questions, continuous listing requirements are important, right? So that's the news item we got. Second listing of Empower Board. Now, so the Empower Board is also active now. You know, Empower Board is now getting active. So basically, there may be a further question. Now, the first question was tested for 2 marks. That was 2 marks only. They have tested this question, but they can test since the market is also activated now. There may be a question on this, and I have uploaded some ratios as well for you, price earning ratio, and later also we can do that when you're doing some questions. Right? Price earning ratio is the most important ratio, and the payback ratio, similar to what we have done. Payback ratio is what under project appraisal. How long will it take for you to recover the investment? How, whatever you spend for this particular project, you take this project income and expenses, the net inflows. So based on that, you can decide how long will it for you to recover whatever the capital you have placed. So the lower the better. Similarly, price earning ratio, how long for you to take the recover the investment you made in shares. Lower the better. So that's additionally. Now we have been discussing with you foreign currency proprietary trading. Uh, Basically, only thing you have to keep in mind, if you are given a question for you to calculate different rates, so you have to keep this formula or the kind of what do you call the kind of a mechanism for you to find out the cross rate, which is more important for you, right? For you to find out the cross rate. Now see now again I am reiterating you now two direct Now we know what direct quotes and what indirect quotes. Right? Two direct and what indirect quotes we know. Now two direct means the easiest method is what? Direct. R1 is direct. USD LKR is direct quote. USD LKR is direct quote. So the R1 Sri Lankan one is direct. Why the USD is on your left hand side? That is direct. That's how you keep in mind. Anything other than indirect. Indirect, we have learned four generally: GBP, AUD, New Zealand dollars, and Euro. Right? So direct, indirect, given like this. This is the question. This is the calculation. If it is two direct, both are similar. If it is two indirect, both are similar. Then you do cross and divide. Why these two? Buying and selling. So the left hand side, now the right hand, this figure belongs to whom? USD or HKD? Obviously HKD. Why? The left hand side is
Sir,
1.
excuse me.
Yeah.
So we don't see the presentation.
So sorry about it. Now we have been discussing this same thing I was referring to, what we have done previous week. Now two directs, two indirects. Right? Two direct, two indirects, same thing. Only thing you have to keep in mind, your left hand side is always 1. Left hand side always 1. So this figure belongs to the right hand side. So there is a problem for us to, once you get this answer, so which side the answer belongs to? Is it HKD or CHK? Why I have not taken USD? USD is common. If it is common, you can avoid it. Then the question comes, we have to decide, is it HKD? CHK. So the examiner is asking you what is now the other day, remember that Euro USD, and it has given Euro USD rate and LKR USD rate, and how much they need to credit in the account. He receives 1 million euros, then how much rupees? So basically, same for the rupee amount you need to find out. For you to find out, if somebody asks HKD Hong Kong dollars, how much? You find out the calculating this cross rate by cross and divide by it is two direct, if it is two indirect. Direct දෙයක් නම් indirect දෙයක් නම් දීලා තියෙන්නේ. This is the method. And the only thing we learn, which side you relate to. Is it CHF or HKD? Or HKD or CHF? So remember that we discussed with you based on the weaker currency. Right? So this is easy. Why? Use this on your one side. But if you take this, you can do the calculation. You can find the answer. Why this is direct and indirect, then straight and multiply. You get the answer, but the only thing you have to find out whether this is HKD or GBP. Here USD is common, so we can eliminate that. Problem comes JK HKD the GBP. Maybe HKD the JK. So there what did we do? We took 1 as it is. Why USD on your left hand side? USD 1 තියාගන්න එකක් කියන එක, that's easy for us. Then you convert this into USD on your left hand side. මේකත් USD 1 තියාගන්න. Then you have the same base, similar pound base. So then you can easily identify. So what do you do for us to keep derive a USD GBP rate? So basically, 1 should be divided by 1.4030. That is how you do. So then it comes how much GBP for $1. In GBP, USD, this is USD. We need USD GBP. That's how we did it. Last step we did. Right? Same thing. Then you have a common platform. You can decide 1 USD. Which currency is more? Who will pay more for $1? Based on that, you can decide this 10 belongs to O. Right? Why? Any Anything you pay more is weak. That country's currency is weak. This currency belongs to the right hand side currency. This amount belongs to the right hand side country's currency. This 10 should be HKD. This 10 should be HKD. Now say in the exam, then you examiner is asking GBP HKD rate, but you have not seen that. And again, the later there is a sub question. Again, examiner is asking what is HKD GBP rate. You need to do all these calculation again. You don't want to redo it. Why? GBP HKD, we know how did we do this here? 1 should be divided by 10.1739. Then you get what? HKD GBP. Same thing, right? Once you find the 1, you can easily find the other one. GBP USD. How did you find out the USD GBP? 1 divided by, we have divided 1 by 1.40. Here also the same, right? There's addition. The examiner asks you don't redo it, right? And it's right. And also there are some questions available for you. Before I do that, I just want to complete this one. Now this is also, I am actually teaching the relevant part only, right? There is a huge vast area on this foreign currency. So I am taking only the relevant parts only for your exam, right? This subject, now this syllabus topic is basically extensively discussed under financial management. There is a involvement and also the financial market operations. There are also somebody doing that 2 subjects. The students will learn further on this. But for the investment banking. The investment banking is basically you are doing an investment bank business. So why do we need this? Foreigner comes to Sri Lanka and if he wants to make an investment in rupees, then we know this. We should know. Right? So that based on that only, keeping that only, we will be taking only the relevant parts only under this. Right? Now, what do you mean by cash, term and spot? You must have heard this. And the foreigner needs. I need money now. That is cash. I need money tomorrow. That is tomorrow, term. I need money, spot. Now, generally, if the examiner is silent on the tenor, it says spot. Now, any transaction you do with the bank is spot. But specifically not saying, I need this money today. I need this money tomorrow. We're not specifically saying, then there is by default, it is spot transaction. So generally banks are doing the transaction, the most number of transactions are on spot basis, day after tomorrow. They are similar to share market transaction, T+3, and also the bond transaction, same thing. Wednesday and the settlement is on Wednesday. Right. Here you do the transaction today, but the currency delivery occurs 2 days time. So that's a general pattern. That's a general understanding of the world. Right? By default, share now here is similar shares and the government security also the similar. Right? Undertaking that, right? Cash comes spot. Anything spot above the spot, we call it forward. Anything spot now, cash means today, term means tomorrow, spot means day after tomorrow. So then somebody wants to say, I need to send money 1 week's time. So then that is forward. You must have heard this. Forward. Now when you import a vehicle, right? Remember that you entered into a forward exchange contract. So that is after 3 months time only you will receive this your vehicle. So then you enter into forward exchange contract. That is forward market. Right? Today you enter into a transaction, but the cash delivery or the currency delivery will happen after 3 months time. So that's the mechanism, but right? That's the mechanism. So the anything beyond spot, anything beyond spot, we call it anything beyond spot we call it forward. Anything beyond spot we call it forward. Right? Now the question we will undertake some question with you. But only thing just keep in mind this for this question we need this. Right. Right. Now see now if you see these transactions, I think you can hear me, right? It's raining heavily. Uh, can you hear me?
Yes, sir.
Right. So basically, if you take a forward exchange transaction, now today you enter into a transaction, then after a 1 month time or a 2 months time, we will execute the transaction. So then, how do you know that? Now, say today price is 10, example. So you want to execute this transaction after 3 months time. So how do you decide the 3 months time pricing now? Today you enter into a transaction, so delivery happens only after 3 months time. So you know perfectly today how much you have to deliver after 3 months time, how much you have to deliver after 2 months time. So how do you decide? How does the bank decide? This is the amount you have to pay. Today 10, then the bank says, oh you pay after 2 months time 15. How does this 5 comes? That is also important. Now in Sri Lanka, remember, we always go by the premiums. We have never seen. Today you enter into a transaction USD LKR 200, but after 3 months time, the bank says no, no, you want to pay only 180. Have you come across transaction like that? Other color this year given, say you are importer. You have ordered a vehicle. So the bank says if you pay today, say $1 is the $1 එකයි වටින මේ car එක. So then you go and ask bank මට මේ ඩොලර් එකක් තියෙනවා මම කාර් එකක් ගෙන්නනවා ඩොලර් එකකට how much do you have to pay? Bank says 200. Okay, I give you 200 rupees to the bank, and bank will pay on behalf of me $1. I will receive the car now. So I have a credit period. So I have spoken to this supplier. Supplier says, don't worry, car will be delivered to you after 3 months time. You also make the payment after 3 months time. Don't worry. Don't make the payment now. Supplier agreed. So then I'm asking from the bank manager, no, I don't want money now. I need to make the payment after 3 months time. So tell me how much, only $1, $1 worth of car. How much do you want me to pay? How much do you want me to pay after 3 months? So the bank manager says 180. That's my question. If you pay it today, it's 200. But after 2 months time or 3 months time, bank manager says you'll have to pay only 180. So we have never come across a situation like that. Basically, we see if it is 200, after 3 months time it's 230 possible. 235 is possible. 220 possible. So anything we have a come across anything more than today's price. So basically, Sri Lanka is going at a premium. Now, if you take Japan, country like Japan, the other way around. Some Euro countries, the other way around. So how does this happen? We'll be learning later. There are two types. Interest rate parity. So only thing examiner has not tested this, but the examiner has tested some derivative transaction from me. That's why I thought of discussing with you this part. There may be a possibility of testing. If If you say 200 today, then after 3 months time 250. What is 50? It's a premium. So how does this premium is determined? Based on the interest rate of two countries, USD, LKR, USD වල LK US වල interest rate එකයි ලංකාවේ interest rate එකයි අරගෙන amount එකක් හදා ගන්නවා ඔයාගේ බැංකුවේ ඉන්න treasury division එක. Interest rate parity එක තමයි ඉතල. US interest rate, Sri Lanka interest rate, you take one and you basically derive a price based on this two countries interest rate, then you add it. So that you know how do you decide whether we should add it or deduct depending on the interest rate. Now in Sri Lanka, we have always higher interest than US. We know. So how much our 1 year interest rate? So basically take the treasury bill interest rate. 1 year is 650 now, the latest last year. Whereas US interest rate, how much? The 30 amount, the other day I told you 30 year. So here 1 year 650 percentage. 30 how much? 1 year 650 means treasury bill, the government security. 30 year US treasury, that is also similar to R1, government security, treasury bill. 30 year 2%, 1 point actually 9%. So who is paying more? Sri Lanka is paying more. So any country's currency paying more means interest rate wise. So we are at a premium. So that's how you decide. That part is not necessary for you all, but only thing you have to keep in mind. We take is 200. After 3 months time, 250 means what is this 50? It's a premium. How does this premium is calculated? Two methods. One is interest rate parity. What is interest rate parity? US interest rate, while we are talking about USD and LKR, US interest rate and the Sri Lanka interest rate. So how does this happen? What is this mechanism is not necessary for you. Right? Understand this only. How this premium comes. So what is the other one? That is interest rate parity. The other one is purchasing power parity. That is based on the inflation. So there is a method, but the most popular method is interest rate parity. So you take two countries' interest rate and you calculate. Now if you say JPY, the Japanese yen, those countries the interest rates are minus. So obviously then you'll have a minus figure. When you have a minus figure, obviously you have a discount. Today 200 example, right? Then after 3 months time 180. It's a discount. That's a discount. So now you know. Now in recent past, dollar interest rate in Sri Lanka, right? Before this policy rate increase, dollar interest rate was how much? 7%. How much the treasury bill interest rate? Less than 5%. So we had a similar situation. We had a similar situation we had the previous. So that's why government has banned, government has discontinued. Government was not allowing for the importers to enter into a forward exchange contract. Forward exchange contract. That is the one thing. The other one is the other one. So everybody was starting to import goods on credit. So basically forward exchange contract means on credit. Right? On credit. So that is the main reason. But again they extended because of this. Government pays for dollars SLDB option. Government. They accepted dollar 7%. Whereas treasury bill rupee interest rate is 6%. Still the similar. Now interest rate paying dollar interest rate is higher. But we can see that it is squeezing now. And earlier high happened this way, then actually how much you need to pay for a dollar? Maximum 5%. So that's why government has put a cap. Maximum 5% only you have to pay for PFC account, right? Except SD account. SD account, the government is paying 2% for 1 year, and additionally they are paying. they're paying back to the banks, right? So the maximum you can pay 5%. So now it has been adjusted. There is no discount in the market now. Now we are going at a like previously premium. So the countries, two different countries exchange the interest rate will decide whether it's a premium or discount. What I want to tell you is keep in mind how this premium discount derived based on two things. It's available on your notes, right? Next notes. One thing is interest rate parity, other one is purchasing power parity. Keep in mind, but the mechanism is not necessary for you, right? In your exam. And before we go into some questions, and I will take this with you all hedging. What do you mean by hedging? Hedging is basically derivative. So basically, we are discussing under hedging derivative instruments. So the life insurance, as I told you previously, hedging means the mitigating the risk. Mitigating the risk. Can you avoid the risk completely? No, you can't avoid the risk completely. What you can do is you can mitigate it. You can mitigate, right? So in foreign currency market, we have several. We have several internal and external. Several internal and external. I have uploaded this one as well, right? You can see this internal hedging techniques and external hedging techniques. The most important thing is identify the major ones. Now examiner, okay. Now say we see internal hedging techniques. You can see this, right? Internal hedging techniques means internally you do it. Section can test you for 2 marks whether this is internal or external. Internal hedging techniques are we are learning here only for the theory purpose. It is not happening. Now what is the first one? Oh, keep in mind only, right? Leading and lagging. Leading කියලා කියන්නේ payment එක කරන්න තියෙන මාස 3කින් නමුත් දැන් කරනවා. Payment එක කරන්න තියෙන මාස 3කින්. හැබැයි නමුත් දැන් කරනවා. right? ඉස්සරහට මේක වැඩි වෙයි කියලා හිතලා. Lagging. Payment එක කරන්න තියෙන දැන් but when you after you come to an agreement with the supplier you delay the payment. You think that you are import, right? From the importer side. I'm talking about the importer side only. Now, your importer side, you think that in the future the exchange rate will come down. So then you wait. Then you request a credit period and you wait and see. Now apply the situation to Sri Lanka now present condition. Can you do that? You can't do that. Now say if you import whatever the items on open account. You know there are 4 methods of international trade. Right? Open account, advance payment, DPDA, and letter of credit. Those are the 4 methods available for international transaction payments method. If you import anything on advance payment, you have to pay it now. Now, some suppliers are not giving credit for Sri Lanka due to this country situation, especially the oil. Now, oil, we have been receiving 180 days LC. Now, all the LCs have to be open either 30 days or 90 days. So, basically, payment has to reach the supplier maximum 90 days. So, they don't want to wait 6 months. Why? They don't know what will happen after 6 months. They need money as soon as possible. Right? As soon as possible. Take LC of crude oil LC is of $50 million, $25 million. How can you pay at once? Difficult, right? So then, so that's what they are doing. Basically, the lot of suppliers are asking 30 days only. So actually, they have earlier we had 180, 270 days, 360 days. Of course, not possible. Supply you can charge interest, but of course you need money, right? Interest is very minimal. So basically, Maximum we can have it 90 days. So basically, leading and lagging. Now these things are not happening. That's I told you. Who says, right? Who makes payment like this? No one. So then, if I make the payment, say now I lead the payment. I do it now. Somebody will be benefited. Somebody will be losing. The other party should like it. So then invoice in home currency. So you import a vehicle. Otherwise you import essential items from China, India, and you do the payment in Sri Lanka rupees. Can you do this? You can't. Sri Lankan LKR is not an acceptable currency in the world. Can't do it. So by invoicing in home currency, are you exposing to any risk? No. රුපියල් වලින් ගෙවුවාම මොකද තියෙන exposure එක? You don't have any exposure. අපි රුපියල් වලින් when you make the payment, there is no foreign currency exposure. අපි මේ ඩොලර් වලට convert කරලා ගෙවන එකකින් අපිට මේ තියෙන exposure එකක් තියෙන්නේ. So when you work with another party, always you are at a risk. Why? We don't know what other parties do. We don't know what other parties behave. So our decision also depends on that party's behavior as well. The USD LKR. To remove the USD part, then LKR is only with us. So the LKR, we have no problem. That is our currency. We know we have ample of currency, so we can pay that. But only thing whether the Indian exporter will accept this currency. They are not going to accept. Why? So what are they going to do? Now now there is a festival in Sri Lanka once a year. So the Indian people are coming to that Konneswaram Deval. They are coming and they are actually using the Indian currency. They are bringing in Indian currency. And we accept Indian currency for that purpose only, and we give them 250 or whatever the rupees. Why they want to spend here in Sri Lanka in rupees. So then we have Indian rupees, but even you accept Indian rupees, you can't do anything. You can't do anything. There is a market outside the banks, black market. When you go India for we say worship for the travel purpose, you can ask Indian rupees from these guys. But other banks issue? No. Banks are not issuing in Indian rupees. They are not issuing. That is not a designated currency. So what the latest designated currency? Thai baht. Right? I think there will be a discussion on going on. The possibility they are seeking whether the Indian currency also can be a designated currency. You see that? Now, home currency invoicing is not, that is a method of deriving internal hedging mechanism. But very rare. Matching means now you should receive something, you have to pay something, then you match it. Similarly, the next one, netting. You make the balance only. You take the difference only. You match it. Now, all these four methods are internal hedging mechanisms which are not in existence. මේවා භාවිතේ නැහැ. Right? When you have done economics, you must have learned this transaction risk, translation risk, and economic risk. Right? These are the three risks involving when you're doing foreign exchange transaction. And I just want to tell you the previous one. Now this one, now we were discussing this in detail, netting, matching, leading and lagging in the home currency. Now money market hedging. Now all these things, then the foreign exchange, currency futures, currency option, currency swaps. Now these things are internal and external. Now, the most external popular derivative instrument with regard to foreign exchange transaction is forward exchange contract. When examiner has tested you, I don't know why he has tested on these options. There was a 2 mark question on your exam, 2 mark question, right? Currency options. Then the currency swap, then you have interest rate swaps as well. So that's why I thought of, I'll give a brief introduction. You don't want to keep in too much, just for your knowledge purpose. This is good for your knowledge purpose as well, right? Sorry. This thing you can read. Translation, when you translate, when you convert into rupees, so then you will sometimes you will expose it. Transaction, when you do a transaction, there is a risk of economically. Some countries are not allowing to now. For example, now see, we have a branch in foreign country. For example, say Bangladesh, you have a branch in there. So the Bangladesh branch, Bangladesh government has put a restriction not to pay out dividend to your mother country. There are economic risk. There are many risks. You have political risk. You can have legal risk. You can have it, but these are the three main. Right? So basically, that's right. Now, what do you mean by forward exchange transaction? Similarly, I told you, today you enter into a transaction to pay the payment after 3 months or whatever the future date to cash, term, and forward. Cash, term, and forward. Now, for example, then how do you decide the premium? How do you decide the price after 3 months? We learned. Today you enter into a transaction, you make the payment after 3 months time, how much you will pay, the bank will give you how much you need to pay. Now we know how do you decide this premium based on one, interest rate parity, the other one is purchasing power parity. Everything now you know. Mechanism is not necessary, right? If you want the mechanism, if you take the USD LKR, so the right hand side, what is the currency you have? LKR, USD LKR. So the LKR rate, LKR interest rate, you should, if you take a formula, it should be on the other or the above. Then the below is the left hand side interest rate, that is US dollar interest rate. So the LKR interest rate should be divided by LKR interest rate should be divided by USD LKR rate. So the USD LKR interest rate is 7 USD LKR Sri Lanka interest rate is, we say, 650. 650 should be divided by US interest rate, which is 2%, we say. So when you divide 650 by 2%, you get a plus. Then you add it. That's how you count. So it's not necessary for yours, right? Don't worry about the mechanism. That's how we calculate. So forward exchange, today you enter into transaction, the most popular one. Now, this is important for you, right? Futures we have not discussed. Futures is not discussed, but examiner can test you the differences between these two. Just keep in mind. Now, forward exchange contract is not tailor-made. What do you mean by tailor-made? There is no standard. There is no standard amount. There is no standard price. It may be different from person to person. It may be different from time to time. There is no particular. No, you have to bring 3 months only. No, there is no 2 months, more than. There is no tailor-made, right? So not regulated. Now these futures are actually, now future is what very similar to in Sri Lanka pledge loans. Now you grow paddy, then before you grow, you enter into agreement with the seller. හරි මම මේක හදලා ඉවරලා වීට එක මම ඔයාලට දෙන්නම්. You purchase it from me. how much, then you agree into a price. The same thing like this. Same thing. The like pledge. Future is basically future exchanges are traded what? Commodities. Commodities are exchange futures. Same thing here. I have given you some example for you to understand. Same thing I have explained. Today you enter into a transaction to make the payment after 3 months time. Now you know if it is today, why the bank says if you say JPY LKR, bank will say 1.8. एक JPY එකට 1.8 ගෙවන්න වෙනවා. So after 3 months time එයා කියනවා හරි. අද ගෙවුවොත් 1.8 ගෙවන්න. එහෙම නෙමෙයි දැන් එක JPY එකට LKR 1.2. You pay me, who pays more? LKR pays more. After 3 months time, bank will give 2.1 given. Now you know how this 1.8 becomes 2.1. Now you know what is this premium. Now you know. You pay 2.1. එක LKR එක JPY මෙච්චර එක JPY එකට LKR මෙච්චර ගෙවන්න කියලා bank will give one මේක දාන්න. So otherwise, once you receive the document, you have to make it. Now you know how to do this, right? So that's how it comes. Forward exchange contract. Now, tell me why importers are entering into forward exchange contracts. Why let's say you are going to import a vehicle. Why you need your vehicle is coming after 3 months time. Why do you want to enter into a contract? After 3 months time you can pay it. Now who knows? Now forward exchange now say if you take a example to US dollar LKR today you are paying 203. $1 LKR when you are importer you have to pay 203. Now presently it's banned, right? Forward exchange contract after the outcome ban they have extended the band as well, but after you make band but yeah, for the learning purpose we will discuss. So after 3 months time you need to make this payment, whatever the amount whatever the good you are importing. Then they see the higher 210 you have to pay. Now you know what the 7 rupees is. How the 7 rupees calculated, that is also you know. Right. So the bank asks you one of your friends asking you, why do you want to make an agreement with forward exchange contract? Why do you want to enter into a forward exchange contract agreement? Don't do. Why do you want to pay 7 rupees after 3 months time? Don't do. Why do you want to agree to pay 7 rupees now for the goods coming after 3 months time? Don't do that. It's a loss for you. One of the friends says, true that, right? 200 now, you have to pay 210 after 3 months time. So then why people are entering into forward exchange contracts? What if at that time the exchange rate has moved to 215? You don't enter into a contract. So we call it open. The open one. 3 months time, good comes. Check the market when you make the payment. Bank manager says, now it's 250. So I'm asking why when I make the order before 3 months time, it was 203. Now you are saying 215. So do I have to settle it at 215? Bank says yes, of course. Why? You have not entered into a contract with the bank to decide the price. Now you have to make the payment based on the spot price, prevailing price. You have not applied or you have not entered into a derivative transaction with the bank. What is the derivative transaction he has to enter into? One thing is, now since we have learned forward exchange contract, he has not entered into losing. If I would have entered, I would have paid only at 210. Now you have to pay 250. You have to bear the loss. So why? So how do you now the basically now say think about you. Why should I? Why should you enter into a foreign exchange contract, forward exchange contract transaction? You think you have a past experience. Our rupee is always getting depreciated. Very rare that I told you that today if it is 200, after 3 months time 180 is very rare. Very rare. So we know by default, by looking at our history, we know our currency is depreciating all the time. Our currency is depreciating all the time. So we think today whatever the amount will not be prevail after 3 months time. Then it is better for you to enter into forward exchange transaction. Now see, example, you don't enter into forward exchange transaction. You don't enter. You keep it open. You go to the bank. When you ask bank from the bank manager 200. Now if you want to make a payment now 203. Okay, fine. The bank manager asks, why don't you enter into? No, I don't know. I'm saying no, I don't want to enter into forward exchange transaction. I would like to take risk. After 3 months time, you check the market. So 250, you're making loss. So then one of your friends told you, no, enter into a transaction with the bank. Okay, since you are telling me I enter into a transaction, bank says 203 today. Okay, 3 months time, they will calculate the premium and they will tell you 210. So once you receive the goods, you have to make the payment at 210. Take a dollar 210 gani given on 3 months time. You agree. You go there. Now the goods have come. You need to make the payment. Nikamata wage you check with the bank. What is the present exchange rate? Bank says it's 205. When you entered into a contract, it was 203 3 months ago. 3 months ago, you entered into a forward exchange contract to make the payment after 3 months' time at 210. When you entered into a contract, can you leave out? You can't. Remember, this is a binded contract. So you say, now the market is going at 205. So why you are asking? So why you asking me to pay 210? You have entered into a contract. You have entered into agreement. Agreement is such. Can you avoid this? Can you avoid this? Can you avoid this pain? Market එකේ $205 ගන්න පුළුවන්කම තියෙද්දි still I have to honor this agreement at 210. Meaning is clear or not? Clear. Why? Derivative instruments are there not to earn profit. Not to earn profit but to minimize the risk. You minimize the risk. But obviously, while you minimizing the risk, you are incurring a loss. That's the different issue. You won't say if the exchange rate is at 215. You won't say anything then. When the exchange is at 205 only, you are saying, Aparade, I would have not entered into this transaction. When the interest rates have moved to 211, 212, you won't say like that. You say it's better I would have entered. I entered into transaction, forex in transaction. So that's how the customers are behaving. Basically, remember that you can't avoid, you can't refrain from honoring this forward exchange transaction. You have to honor it anyway. You can say that I don't honor this transaction, but still what? You can do that, but still you have to pay the difference. What's the difference? 205 for this transaction, 205 is the present one. While entered into transaction, what price? 210. So the 5 and 10, 5 rupees has to pay to the bank by the customer. So anyway it's a loss. Anyway it's a loss. So the bank will, without having the consent, the bank will debit your account. This is binded legalized contract, foreign exchange contract. Understood? Why? So the understand why you entered into this derivative transaction to avoid the exchange risk. If the world is using the same currency, there is no foreign exchange risk. Then we will not talk about foreign exchange transaction then. But the world is using different currencies. I don't know whether you can remember for the South Asian region, there was a time that introducing a one currency like euro. Now euro, the South Asian ones are not fruitful, right? Some countries don't like, some countries like. It's very difficult to determine the one particular rate. Some countries losing, some countries gain. Now see the situation in euro. Euro earlier, now different countries, different currencies. Hmm. Different countries, different currencies. Now some countries have applied same currency. Now, if you say Italy, those days lira, right? German Deutschmark. Now they all are using what? Euro. So the UK is one of the ECB country, European Union country. What is their currency? They have not entered into this. They are using GBP still. They are using this, right? So basically, that's the thing. That's the thing. Even they are in the European Union, they are not using. They are not following Euro. They are maintaining their own currency GBP. Right? If you say US dollar, US dollar GBP, US dollar Euro USD pays more. Anything you pay, we learn which country's economy is weaker or strong. Right? So basically, some countries are like that. So if the world is applying the same currency for all the transactions, so we will be not talking about this topic. But the world is not like that. Now, similar currency. Now, for example, now in Sri Lanka we have LKR, Sri Lankan rupees. If you see the India, Indian rupees are the same but two different. Now, एक Indian rupee लगता after you know 235. So there is exchange differences. Now, if you say Maldives rupiah, and Seychelles rupee, but Seychelles, not Sri Lanka. Different currencies, different exchange rates, right? So you can understand the four derivative instruments we learn internal one are not practical. You don't like it. Not practical. Very difficult to put into practice these unless these are not practicable, right? Now see the question now. These are the type of questions. Similar question I have for you. Sri Lankan company, I'm just reading it to you later, we'll do. Sri Lankan company, just to give an idea, examiner can test you this kind of in. Sri Lankan company exports garment to United States. On 1st 2015, company invoices a customer in USA $600,000. So you export, and which was receivable in 6 month time. Your money will be now your exporter. You will not receive immediately. You will receive after 6 month time. So are we importer? Think about the Sri Lanka now. We are in Sri Lanka. Think from the Sri Lankan side. Sri Lankan, Sri Lankan guy is exporter, importer, exporter. Exporter likes interest. Exporter likes uh, their own country's currency getting depreciated or appreciated. They like exporters like exchange rate to be depreciated. Exporters like exchange rate to be depreciated. How much you pay now? It's 200 for the conversion of export proceeds. Before this ban came into effect, how much they pay? 226, 230. Now banks paying 200 only. So they don't like it. Rupee appreciated. Exporters don't like. They don't do much conversion. Which was receivable in 6 month time. Not now. The finance manager entered into a 6 month forward exchange contract today. Exporter. Why exporter wants to enter into a contract? What is his exposure? In the future, or the 6 month time, exchange rate will appreciate. They lose. This is the big he'll have to convert whatever the amount coming to Sri Lanka. If he needs to convert into Sri Lanka, then he will be converting at 180. So then you enter into a contract with the bank. Convert this into. So you entered into a forward exchange contract. Export process to be converted. The USD export rate February 1st, 131.50, 132.40. Buying and selling rate. So then you will have to decide. Now see, forget about everything. You received 600,000 to you. Bank now say USD export rate 1st February 2015, 131.50, 132.40. Whose code is this? We have learned everything. Now you should know. Whose code? Who says this? 131.50, 132.50. How do you? Bank code. So then, now in the exam, suddenly now you can't say now how the make can what is this 131.50, 100. You can't say, but suddenly it should come into. Now all this we discussed now should instantly come into account, into your mind. 131.50 is a buying rate. For the left hand buying, while two rates are given, buying and selling. You know, whose quote is this? Banks buying. So the banks buying at 131.50. Banks give for $1, 131.50. The 6 month forward rate USD 135.40, 136.40. 6 month forward. Now this should be 100. This should be 40, right? So it's 50. So the 6 month forward exchange rate USD 1 February 2050 135.40, 130. Today entered and you check with the bank, 6 month time how much? After it. Now, now means what? Now here the bank gives only spot rate, right? Now, now 131.50. Now after 6 months, 135.50. What is this difference? 131.50, 135.40 premium. 131.50, 135.40. It has gone up. What is this? Premium. Correct? Yes, in Sri Lanka, in terms of Sri Lanka, yes. Why? Our interest rates are higher than US. What is this? Interest rate parity. What is the other method? Percentage per annum. Difference is calculated based on one of these two methods. But what is the most popular? Interest rate. Right. Everything you know now. In the 6 month time spot rate, if you enter into a transaction now, bank says, okay, we will convert. Now see that words are different now. We will not pay you. We will convert whatever the amount you receive, 600 odd dollars after 6 months time at what price? Now say if this rate prevails, which rate bank will convert? 130, 680 or 135 It should be 135.50. Why? This is banks buying. This is bank selling. That's always right. By default. So now see bank, okay, you enter into a contract. Then after 6 months comes. Now export proceeds have come 600,000 to your account. Now you need to convert into dollars. I'm sorry, the rupees. Nikamata wage you check the market. 38, 138, 140. මොකද හිතෙන්නේ? Your export. What price you need to convert into rupees? Your dollars? Your dollars will be converting at, since you have entered into a forward exchange contract, 135.40. Banks buying rate. Bank will buy it. Just check the market. If you have not entered into the forward exchange contract, you would have converted this after 6 months. Now 6 months spot trade. 6 months වලට පස්සේ ඒ වෙලෙත් ඇත්තටම එන rate එක. So how did කොහොමද මේ rate එක decide කරන්නේ 6 months? That is bank. When? පළවෙනිදට. Now bank, now see, bank doesn't know exactly how much after 6 month time rate. Obvious, right? If we can predict the future exactly, we all should not be here, right? දැන් හෙට ෂෙයා මාකටේ පටන් ගන්නවා. මොනවාරි ෂෙයා එකක් හෙට රුපියල් 10න් උඩ යන බව if you know it today, what do? මොලේ පොඩි හරි කාලයක් කර තියෙන මිනිස්සෙක් what do? හෙට ෂුවර් එකටම වෙනවා මේක. not a hypothetical. හෙට දැන් උඩ යයි නෙමෙයි. අනිවාර්යයෙන් මේ ෂෙයා එක රුපියල් 10ක් යනවා. What do? If you don't need any kind of brain, but if you have a common sense. So entire thing, whatever things you sell and you realize gain, realize money and you invest. I hate a රුපියල් 10 කෙනෙක් perfectly if you know that. වෙනවද නැද්ද? No. වෙන එක වෙනවා. We won't be here. That's why I told you we won't be here. So bank doesn't know exactly what will happen after 6 months time. So how do you know this? How do you decide this? Based on we have learned two things. Interest rate parity, purchasing power parity. රටවල් දෙකේ interest rate වෙනස් වෙන්න බැරිද? No. But we are now remember that when we discussed the yield curve, I told you the same assumption. Based on the today only we decide. Now, before this policy rate increases, before this policy rate increased by the central bank 0.5% and SRR reduction by 2%, did we know it? Only දවස් දෙකකට කලින් මොන්ට්‍රියල් බෝඩ් මෙම්බර්ස්ලාට papers ටික යනවනේ. එතකොට they will but decision has not been taken at that time. But I'm asking, we as an individual, we as outsiders, did we know it? No, we didn't know that. So then your decision now, see, today central bank increase, example, today in central bank increase the policy rate, but yesterday your bank took a decision to issue a debenture. Today policy rate increased. Policy rate increased. Yesterday your bank took a decision to issue debenture. My question is, exam also can test. My question is decision to issue a debenture is a good decision or a bad decision? Now, yesterday your bank decided to issue debenture. Today increase the policy rate. Now we are in today now. අද තමයි අපි දැනගත්තේ policy rate වැඩි කරලා තියෙනවා. So yesterday we decided to issue debenture. Was it a good decision or a bad decision? You should be able to answer. You should be able to answer to learn well. Today you increase today central bank increased the policy rate. Yesterday your bank decided to issue debenture. My question is, was it a good decision of your bank? Your bank didn't know හෙට මේ interest rate වැඩි කරයි කියලා. You didn't know. That's why I'm asking. So you took your decision to issue debenture based on the yesterday's yield curve. You know yield curve. Based on the yield curve only you decide. Now today policy rate increased. So what I'm asking, somebody is asking here, issue කරන්න ගත්ත decision එක model decision එකක් නේද කියලා. Somebody asks you the same question. What will your answer? The answer should be what? Yes, it is not a model decision. It's a very wise decision. Why? Now think about it. If you are issuer, who has to make the payment for the debenture? Your bank only. If fortunately you issue a debenture before increase the policy rate, if you wait another 1 day to issue this debenture, will the people invest? No, they don't. Why? Oh, increase in the policy rate has started. So don't worry, don't invest this debenture for 5 years. We don't want to look at lower level by investing in this particular debenture for 5 years. We will wait. So sometime now, yesterday they have increased. Today they have increased. Further, they will increase in future as well. එතකොට මේක දැන් අපි කියමු හෙට කෙනෙක් issue කරනවා debenture. අනිත් කෙනෙක් issue කරන debenture, then they'll have to adjust this policy rate increase as well to their debenture interest rate. So basically, from the investor side, wait and see policy is appreciated. Good decision. But think from the issuer side. Fortunately, you issued debenture yesterday. Fortunately, you issued debenture fully subscribed, same day. Fully subscribed. EM issue කළා, EM මිනිස්සු සල්ලි දාලා ඉවර කරා. then you have issued this debenture at a lower regime when the interest rates are at lower regime interest. Meaning, you have issued this particular debenture at a lower interest rate, which is good for your bank or not? Obviously, why you pay lesser interest rate for the investor, right? You pay lesser interest rate for the investor, and I will upload. I have the document with me. Commercial bank debenture now recently issued commercial bank debenture. They have put advertisement in the paper. Debenture issue fully subscribed. That one also I will upload it to you. I have the photo with me. I have sent them, but it has not reached to them. I will ask them to upload it. Right? Now now see now this is something else actually. We were discussing something else, but examiner can ask questions. He will. But did we change anything what we have learned? No. Same thing. When the interest rate goes up, obviously, instead of the interest rate value when now, you should issue now. Think from the issuer side. That's theory. Situation may be different, but if the interest rate goes up in the future, you since you are issuer, you issue now. You block your funds. Think from the issuer side, right? You have to make the expenses. You issue now. You issue now. You block. Don't wait until the interest. Now the what is the bank's advice given? What is the advice given to the bank? Issue as soon as possible. Why? There is another interest rate hike in the future before end of this month. So better to issue now. අරගෙන ගමන් තව දුරටත් interest rate වැඩි කරන්න. People will not invest in your deposit. Right. Now coming back to this. Now 135, like we discussed, you have to honor it at 135. Check the market. If I waited, if I am not entered into foreign exchange transaction, I would have converted my USD what rate at 138. So meaning is what? You are losing how much? So you are losing how much? Difference between 138 and 135? 40. 2 rupees and plus. So if you take 2 rupees, 135, 40 minus 130, up to rupees. 260 into 600,000 is your loss. Is your loss. That's that. Make appreciate you won't say like that. But only thing, very rare that exporters are entered into foreign transaction. Presently, very difficult. Very rare that they take the transaction in Sri Lanka. And basically what they do is they have in export bill discounting facility. They actually realize it. So they don't wait till 6 months. So they need money. They will do the discount with the bank. That's what they do, right? So these are the kinds of questions you can have in the exam. This is the purchasing power parity we discussed. We have discussed. I skip this. And this is the interest rate parity. Interest rate parity for you to read. Basically, it depends on inflation. Now, interest rate of two countries. Similarly, inflation of two countries. Agreement. Now, future are basically, I told you, it's basically what similar to pledge, like pledge. Now, pledge is basically you enter into a transaction with the the producer now, and I will purchase this particular whatever the good at this price. So you can read this, and it's available here. Right? What is the future transaction is? Only thing you have to keep in mind that I have remember that I gave you some differences. I mean, this is important, right? If you read it and keep in mind what futures is more than enough for you. If the examiner asks you what is future, more than enough. And on futures, I have given you particular note which is relevant to you. Now, future is a very lengthy subject, right? But for you, I have given very concise format for your examination purpose only. Now, option is also very much similar to forward exchange contract. Option. Option is also very much similar to forward exchange contract. You enter into a transaction to pay, then bank can ask you, no, don't enter into a forward exchange contract, you enter into option. Option is you can see different names. Strike price is there, and then the call option, buy option, those things. But only thing I recommend you examine tested this thing, this one. They actually these two. This was exam in the exam. This was given option that only exists on the expiration. You can make option like you have to keep it with you until it's get matured. You can't do anything. That was the question exam test, right? But only thing you have to keep in mind, just remember. I will give an example. Only thing you can please remember what is the call option and the put option. If you can, don't go too much and just keep in mind call option means a right to buy but not the obligation. Right to buy but not the obligation to buy. Now example is this. Now see, now there is a, now say take a share, don't kill share. Options are available for shares as well, right? Not in Sri Lanka but other countries. Currency is also available. Now, Georgia shares today we say 130. 130. It's going at 130 rupees. Now, you enter into an option contract with somebody to purchase this particular share at 120. Present market price is 130. You enter into a contract with somebody to purchase 120. 120. 120. You enter into a contract. Now, say 3 months time, within 3 months time, you enter into, within 3 months time, this transaction will be executed. Now, within a 3 months time, one day, this don't kill shares trading at 118. 118 is going at now. Oh, now the other party comes and you said you will be purchasing this particular shares at 120. Now it's going 180. Do you buy the call option? Now see, buyer of the option, right to buy. Buyer has the option. Buyer has been given right to buy. ICR buy current. ICR buy current, of course, yes, why? Going at 180, so I wanted to have this 120. I have a right. I have a right to buy. I have a right to buy. Okay? I have a right to buy. But not the obligation to buy. But I will not buy it. Can you do that? Of course you can. Right to buy. Right to buy. But not the obligation to buy. I have no obligation to buy. I have no obligation to buy. Right? Is there any right? Yes, yes. Now, if I want to buy, somebody should be available. Somebody should be ready to tell me, according to this contract, for me to take at 120. Now, 120 is the price is what? Striking price. 120 is striking price. For you, it's not necessary much, but only thing you keep in mind, what is the meaning of this call option, put option, that is more than enough for you. And also, remember this type of option, this thing. These are the things you keep in mind. So as long as if you know this on options, this is enough for you. And also remember, like forward exchange transaction, this is the alternative method of forward exchange transaction. But if the examiner asks you, is it future or alternative methods of forward exchange? No. Forward exchange transaction එකට තියෙන alternative එක තමයි options. Just keep in mind. Option, there are two types of options. Put option and call option. Then these are the option types. That's all. Keep in mind. That's more than enough for your exam. That's one thing. Right. We'll have to do this. You have to keep in mind this, right? So the only thing, there is a different methods we have to discuss. Substantive, derivative instruments. Then we will be moving up to corporate finance. So the next week I have given them. They will upload into your classroom. Mergers and acquisition part, the corporate finance part. Then we have another one to complete the asset securitization. So basically we can finish it off everything, right? So then we will move into questions and what the questions we have given to you and things, right? Don't worry about this foreign exchange transaction questions. I have latest questions with me. We will do one or two questions from the exam and from this one for us to understand all further, right? So from next week we will be starting from the last derivative option strips and caps and flows, and we will be discussing in short, very short, and we can finish it off, right? And I got a request from the IBSL. Then there is an evaluation sheet given to you, which is available on your classroom, and there was a request from them. Just fill it and give it to them. I don't know how you are sending. It must be on digital, right? So request you to fill this up, and that is also put to attention. Any question you have before we wind up? Right. So then we will meet up next week. Plan is to finish this. Then we will start. We will be starting corporate finance. So the mergers and acquisition, very important topic for you. Mergers and acquisition. Then we have asset securitization. With that, we can finish it off for your syllabus within 2 days or maximum 2.5. We can finish it off. So then we will move into questions. Please be ready with what you have done so far. Otherwise, when you're doing questions, just listening and writing is not going to work for you. Right? Start it and we will slowly do it. Right? Don't worry. Right? So we can cover up everything. If you have questions, bring it to the class and we can discuss other members as well. Okay. So then we will wind up today's session. Thank you very much for the participation.